Alright. Oh, man. Morning, y'all. It is 8 a.m. New York time. Or no, it's 6 a.m. New York time. Um, we got about an hour and a half. Huh? What time is it in New York? It's about to be 8 a.m. New York time. Yeah, yeah. We got about an hour and a half before 9:30 New York time before the market opens. So yesterday was wild. I'm pretty sure that was just like a liquidity chase from non-farm payrolls right here. See how it goes up to that key level, bounces around, right? Tricks us with this little uh, high frequency trade, algo push, or just bars for key levels. But we're gonna keep those key levels there. I'm gonna keep these here as well. And we're just trading on the same key levels, y'all. Nothing crazy to see here, but I have heard that. Excuse if you hear my stomach rumbling. Excuse. I have do, 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 do. Mm, 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 mm. There's a fair value gap right there. Need to come up with some colors. Little thing. Oh jeez. So read online on a little Reddit thing that let's see right here. Yeah, that was a good fair value gap, yo. Right here. Could be like, so basically that I heard that 1 hour fair value gaps is what you want to trade. Going down to the 1 minute chart. And you can you can look at the 4 hour going down to the 30 minute, 15 minute chart. Down to the 5 maybe. But we're still learning, y'all. It is pre-market, I'm sure. Um, we're just gonna mark out a fair value gap that was made yesterday. One, right, two, right, three, or would this be one, two right here, and then three? Which is a good question. Tis a good question. I would say one. I wouldn't count that first one, but then again, we're in the hourly. Let's go down to 15 minute. Yeah, there goes one. Two. There's two. There's three. I mean, it looks like price doesn't want to get above. There goes our frequency. Low frequency trade. To the 5. I mean, we are pretty strong in the uptrend. You can see though we did double top, I believe, on the RSI there, daily chart. And yo, I'm just noticing things. I'm not. Don't take this like my whole entire process isn't like formed yet. I'm still learning. That's the journey. You know what I'm saying? But yeah, it looks like we had a little tiny flush, little tiny flush. Let's zoom in on that. Uh huh. Uh huh. Uh huh. We've just been trading in this little zone. No inside bar in there. Yeah, it's not an inside bar at all. Broke down a little bit here. And we are at the highs of the market, so it's a little harder to really analyze price action. So what we're going to be looking at today, what we failed to do yesterday was it's a 15 minute. I want to see what some of these levels are. I don't think we need that many no more. This, delete, this, delete. All right, we're trashing it all. We are trashing it all. So I mean, it looks like market wants to take this out, yo. That's what it looks like to me. Look at this down, right? This was non-farm, right? But you know, and yeah, see how these break in pre-market right here, broke. That's a 12. That's a 9, 12, and 55. 9, 12, 55 broke. I'm going calls, y'all. I'm going calls for sure. But let's mark out some levels here. Go the low. Well, take a look at the 5. In the 1 minute. Yeah. Bop. 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 So I'm gonna change. So the high frequency trade levels. We're gonna change that color up. I'm gonna write this down too somewhere. That color is officially going to be purple. 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 And then, our areas of interest will keep that the default cyan. And go to the 5-minute for those. Seems to be a area of interest right here, right around here. That's coming off of yesterday. Go ahead and mark that. Right around there. Let's see. And then you know what? We'll just mark off the high as another area of interest. Oh, and then we'll mark off this little one right here. Seems to be a nice area of interest right there. We'll go a little bit below for our beginner's sake. Boom, right there. All right. I like it. I like it. I like it. I like it. Now what's below? What's below? It's 15. What is below? There's not much below, y'all. There's not much below. If we really wanted to mark something off, like we'd mark. Yeah, something like that. I'll just do one. Cause really, like it's been a few days, yo. And if we sell, then like we know that like it's a bit to go. Maybe like down here, 518. We'll see what printer says. We will see what is going on. But so our purple is our high frequency levels that happen at like 8:30. We'll move them if 8:30 comes along and it's not the same. But yeah, so here's what we're gonna be doing. I'm gonna put QQQ up top. SPY. And then we're putting high cap mag 7 names right underneath it. And we're gonna be checking those, especially in those first few minutes. I'm gonna be using that as like my buffer to see, you know, and I don't know how much weight each one has yet. I mean, obviously you could just say like Nvidia has the most weight, but I'm gonna keep Apple up top just because Apple's older. Tesla, put that over Meta, and AMD. AMD has gone down a lot. I might want to short that, but honestly, it looks like, is it approaching any key level here? Whoa, it is down. What's it doing? Maybe a 120, you know. Oh my. It's got momentum too. I don't even know what these lines are doing here. I don't even know when I made them. $130. Yeah, what are those 121 options looking like? The fuck is this? I don't even know what's going on here. Yeah, it's a cross layout. It should be whatever I click over here. Apple. Why is it not showing? Oh, there it is. So now it wants to do some micro AMD. Boom. There it is. What are the options looking like? $120, $22. Ah. Oh, jeez. Oh, $12. It's no fun. It's no fun, y'all. I may just take these AMD ones because I know printers called this out a long time ago, and it's still going. You know, looks like it's got room to run. Lows, highs. We'll see what happens with it. We'll see what's up. Tesla's going crazy. I can't afford Tesla options, but it's nice to take a look at when the market opens. Can't we short the VIX? Doesn't everybody do that? Doesn't everybody? Yeah, everybody shorts the VIX. It's got nice spreads too. Oh wait, those are bad spreads. These are good spreads. No, these are bad spreads. They have bad spreads. It's okay though. It's okay. It's okay. I don't want to mess with any spreads right now because I don't know what I'm doing. I'm deleting this. How do I delete this? Oh jeez. Okay. Let's stick on this watch list. Boop, 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 boop. Oh, I was breaking that. Wow. Would you look at that? Wow. I'm just waiting on that, man. Waiting for the market to open. There's some bond auctions going down. There's some non-farm data coming out, but it doesn't look to be too crazy. It's the productivity, non-farm workers. If that goes good, that's a good catalyst. Forecast is for it to go down though. Don't know how that works, but output of goods and services per hour worked. Coming in 15. I bet they expect it to be good because non-farm payrolls went good. People getting paid more, people working more. You know what I'm saying? But yeah. Man, I want some breakfast, y'all. I'm hungry. What was I finna do? I was finna do some. Show y'all some. Fair value gap. We gotta mark off a fair value gap, yo. Maybe I should just keep WEBULL clean and just do all of this on if you're going across multiple days, I want to do it on the hourly. We'll do it on the hourly. Okay, that's the cleanest one. Which one am I picking though? People say not to pick the first one out the day and pick the middle ones. That would make this be the fair value gap, which you know it is. It's like, so we'll draw it. We'll draw it now. You know, they're not perfect, but they work. You know what I'm saying? So, there's a little fair value gap for us. That was our impulsive move down yesterday for liquidity. It looks like that's a high frequency trade marker right there. So we're not going to ignore. We're going to take it into account for range. But I mean, honestly, like, I'll see. Well, we'll just keep it like that. Keep it like that. Which is, you know, it lines up nice. You know, I'm liking it that these lines that I'm making, shit just lines up nice on a chart. You know, depending on what time frame you're looking at. Yeah, we'll keep it like that. I don't know if I want to drag it down to the trade marker or what, but just keep it like that for now. For now. I'm tired, y'all. I'm sorry. Um, yeah, I figure we come down pre-market and then shoot back up. That's what it seems like could happen here. Yeah. So that's what we're waiting on. I don't know if I want to go short AMD. You know, it seems like a sure bet though. Let's look at what traders are saying or printers are saying. They called out a level 522.34. So we'll mark off any other levels with a different color. It's a darker blue, so that we don't necessarily see it. a 60% chance of failing to carve a new low below Monday's low, which is this. So that's their little vector. They say if it drops below here, then down to about 519. And since we're trading at highs, they say, very possible for that move up to be strong. So we're just waiting. I'm just waiting. They say you can drop a fib on fair value gaps. Why are these all fucking... Yeah, dumb. Delete. Not dropping fibs. We ain't dropping fibs yet. Yeah. I'm gonna get some Malo, y'all. Get some Malo. You know, I fucks with Malo. Comment below if you fucks with Malo. Yeah. Alright, I'll be back. We'll go over the news. When I get back. What's up, y'all? You know, like in just a flash of a couple seconds on a microwave. Okay, non-farm productivity comes on expectation, and market drops. Let's see what's up, y'all. We'll see what's up. We'll just go over some news here. Venezuela's opposition leader. I'm convinced I'll travel to Venezuela to take over as president. Venezuela's president got brain surgery, just got out. Seems like he's doing fine. Let's see. Non-farm unit labor costs revised to 0.8. Consensus was 1.5. These are revised to 0.8. The consensus was 1.5. Previously it was 1.9. So labor costs are down, which is good. Should be. I guess some inflation in there. I don't even know. Yo, I'm gonna get better at reading this macro stuff. Russia's Duma backs legislation to remove Taliban from list of banned organizations. Okay. Sony just set a new record high. Boeing shares up 1% pre-market after report. CO restarts 737 MAX production. Alaska Airlines to launch direct flights to Tokyo and Seoul from Seattle in 2025 post Hawaiian acquisition. Casey's General Store EPS 4.85. eBay downgraded to underperform by Jefferies from 60 to 52. Stellantis and CATL to invest 4.1 billion euros for a low-cost EV battery plant in Spain. Toll Brothers revenues up 10%. Contracts up 30%. Vail Resorts guides up. Revenues, not sure if it's up or down. Fluence Energy offers $300 million in convertible bonds due 2030. Amazon and Intuit expand partnership, leveraging AWS since 2013 for enhanced customer experience. Eli Lilly launches $15 billion share buyback, increases dividend by 15%. Wow. Oracle earnings came out a little bit under. Revenues a little bit under than the estimate. AI demand boosts Oracle Cloud infrastructure by 52%. Total remaining performance obligations up 49% to $97 billion. Cloud revenue up 24% to $5.9 billion. I mean, Oracle's a good driver. Bananas on sorry guys if none of this makes sense, but I'm following some people on Twitter to do banana three stocks. Y'all should check him out. Probably gonna be following some of his trades there. Uh, Micron Technologies receives a $6.1 billion subsidy for U.S. semiconductor facilities. Banana three stocks. What was I saying about them? Grabbed Google calls, right? So if we're taking a look at QQQ, I'm betting that it's going up. Apparently they got a spread of bets on who will Joe Biden pardon next, which is hilarious. Did not know Liz Cheney is got convicted or Anthony Fauci got convicted. That's funny. Let's see. Yep. Yep. None crazy, none crazy. Oh my god. That Milo shit go crazy, yo. What you know about that, bro? Let me not like sip so loud. Some more news here for y'all. We got some price upgrades on Tesla with some real good optimism there. U.S. Small Business Confidence Index increases 8 points to 101.7 in November. Small business confidence surged to the highest level in nearly 3.5 years in November amid post-election euphoria. Biden's trashing Trump. Some political stuff here. The global airlines industry set to break records there. Israel and Syria is pretty crazy, I'll tell you that much. I see. Google announced some new AI stuff. That's why everybody's pounding on calls there. Release of Willow, its new quantum computing chip. See, all these little AI chips have like their own set of benchmarks. I don't think investors even understand really like what's trash or what's not. You know, dipping pre-market a little bit. So I got $12 to work with. Yo, I'm leaning in on calls just for Qs. Honestly, I don't know if I want to go short AMD on a day like this. It's already been like stomped on. Don't know if it has any further in it. Probably gonna go back for a second round of Malo. God, I keep applying to these jobs, yo. Nobody's hitting me back up. About 50 minutes to open. Okay.
have to have your setups in place, and when something sets up for you, with that risk reward, execute and honor the trade setup. If it doesn't go the way that you anticipated, honor those stops and wait for the next setup. And that's the best advice I can give.
I couldn't agree more. I really couldn't. And sometimes it is a good exercise, especially for newer traders, or if you are struggling with feeling like, especially on the future side, right? Because there's not really the time decay when we're trading intraday. Like if you're trading options, especially weeklies, or one or two DTs, even zero DTs. If you get in a trade and it's not working out, it goes against you pretty quick, because that time value starts to eat at the value of your contracts, right? The theta starts to burn. Futures, you don't have that. You don't have PDT rules either. You can jump in and out of trades all day long, and I think it creates, especially people that are maybe newer to futures, it creates a feeling that you can always be in a trade somewhere. Sometimes the market doesn't have a direction, and the best direction for your account to be in is just be flat, and it can be a great exercise just to sit and not take any trades, and build that muscle, or that feeling of not being in a trade all the time, and being patient and waiting for the setup.
Yeah, and the crazy thing is, I see a lot of sort of newbie traders come in and start trading these zero DTE options, weekly options, or any options, and nobody should touch an option unless you're consistently profitable trading equity. And I don't care if you're taking 5 shares of something as you practice and build up your account. Do not touch an options contract until you're consistently profitable trading equity. I can't stress that enough.
Okay, I'm leaving that. I don't even know what that was. Some dude I follow on Twitter doing his thing. Don't touch your options unless you've been consistently profitable in equity. All right, bro. All right, bro. We're going calls, baby. Look at that rejection, baby. We're going calls. Yeah. Comment, like, subscribe, y'all. If you want to see me fuck around, you know what I'm saying? Oh, my mind's by. I'm on the queues. I'm on the queues. I'm waiting for this to dip a little bit. I'm in for a 526, 527 like yesterday. 0 DTEs per usual because we're desperate. And I will be setting my TPs and SLs today. It's a nice Milo, man. I'll tell you that much. Alright, let's look at all this. Thank you. I'm messing with this A. What is it called? It fits the data to the screen. What are we on? 1 minute. Look at 15s. Yeah, I'm not messing with that short on a video. Amazon looks like it's about to go down, maybe. Or like go down first before it goes back up. Catches up. And see what Scarface was doing, or what he was saying, was that, like, to spot some of these good options contracts is you want to be taking a look at the Qs, what it's doing compared to SPX, plus switching through like Mag 7 stocks, or just like real large cap stocks that are in the Qs, and see what's going on, see what you can take advantage of. Because if the Qs are going up, it's likely that that's going to go up some, if not most. Apple just went crazy yesterday off it. Yeah, that's wild. That's wild. That's wild. That's wild. Qs. 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 Below VWAP right now. Yeah, definitely gonna break, yo. Definitely gonna break. We'll see if it gets rejected, but honestly, don't know, don't know. Yo, y'all hear about Jay-Z being involved in the Diddy stuff? Crazy, yo. 13 years old as well. Bank of America is partnering with XRP. It's crazy. Crazy. Calls, y'all, calls. Tell you what, man. I'm saving. I am saving. You gotta save that money, yo. Shooting back up a little bit. Some bearish flags. Inside though, VWAP's going down a little bit. We'll wait for market open. 30 minutes, y'all. I'm gonna have to show Severance. Get actors in it. Let's see what's up. What's going on in printers? Not much. Not much going on in printers, just some NQ levels. You know, I wish I had stop losses and take profits on the last trade that we did during that real big correction. Would have been nice. Would have had a lot more to play with. Would have understood a bit more. But it's all right, you know, because we got it. We got it now. And we'll build it up. I swear we will. Look at this. Look at this P&L. 1 month P&L. Lost 150. Lost 150. Not fun, not fun. But I swear I'm going to get back above this. Y'all just watch. Y'all watch how it goes down. Let me watch an already video real quick. Based off of yesterday, see what he's saying.
Buy on blue, sell on red. This new indicator gives extremely accurate.
Hey everybody, welcome back. Well, pretty wild day today. Saw some rotation. We're going to talk about what to expect coming up with CPI, what the Fed looks like they're doing next week. But most importantly, we had a little bit of a technical move today, and we're going to get into it. In today's public pre-market live, I went through a level and said if we break this, we have issues. And I'm just going to mark it off here so that we can all see that level and the other one below it. And really what we're watching is that low of the non-farm payrolls number. And right below there, there's another level, and you can see it right here. Which we kind of came down on that Wednesday, 10:15 on the ES S&P futures. And then when we started to break those, that's when we started to have some issues. Now, coming across here, we pointed out a couple things again. If you don't follow us in the mornings, you might want to. It's taped, it's live, and it's public. So you can start to see this double top. You can see the break right here. And we pointed out a couple things too that we really wanted to watch. One, we weren't really crazy about how this was setting up, the failure, the keep failures, and then of course you have that 10 o'clock breakdown. You can see your trend line right here as well. I'm not going to spend the time drawing it, but this is always bothersome for me. And I went through this today with the Ichimoku cloud. And I'm just going to show the cloud in and of itself. Interestingly enough, the most popular video I ever did was this cloud, which is always fascinating to me. But one of the things that I watch is when this rolls, it's 26 out from when these are measured, meaning 26 in this case hours from when this will mark off, when you'll start to see that actually change. So it kind of gives you a little bit of a heads up, like, hey, we're having a problem. So if this starts getting tighter and tighter and you're below it, it's telling you a story, and whether or not you want to listen to the story really doesn't matter. The story's there. So what we're seeing is we're seeing that break. And if you go here and take a look, when you're breaking this cloud like you did here, it doesn't mean you can't get back over, but you just want to pay attention to it because you don't have any stabilization. And you can see that for yourself. If you're above the cloud, you're stabilized. If you're below it, you're not really stabilized, are you? So you just kind of want to wait and understand where you are and just go, okay, well, where is it? You don't have to act on it. You don't have to use it, but it doesn't mean it doesn't work or that I don't find it helpful. So when you see these kinds of breaks, I just kind of go, okay, well, where would I have to go to get above this? And that gets me back to that 6,100 level that I'd really need to be above. So now I need to see if I'm going to be able to get above that or I'm not going to be able to get above that, and kind of go from there. And we're going to have to see how that plays out. But right now, this is what happened. We're below this cloud, and obviously we're breaking down. Now, after hours, you have some earnings, and they're kind of wreaking havoc on these things. But is this the end of the world? Not really, no. But you're not going to go up every day. And actually coming back and backfilling is actually really nice. It's actually very helpful. So it just gives us more basis as we go forward. And some of this stuff got a little frothy. I don't think anybody thought that it didn't. And you can kind of see where you're heading, probably like that 60, 50 level, call it 47. You have some stuff in here too that you blew through. So trying to get through some of this stuff might be a little harder. Is this really an area of interest? I think you'd have to say that the answer is yes, because you held it and you bounced. So you're going to want to watch 59 and just make sure that you hold in there. But overall, was today a bad day? It was a bad day if you bought the open. But again, it felt heavy. We talked about it being heavy. It is what it is. You're going to have these kinds of days, and you have this massive volatility. We're going to talk about that volatility in a second here, and how you should be looking at the volatility, because people are looking at the VIX and they're looking at the wrong thing. I'm going to show you what you should be looking at, because you need to be looking at micro risk, not macro risk. There's a very big difference in the market right now. It's not just the stock market, but it is becoming a market of stocks, right? You're seeing negative correlations, right? Where you're seeing divergence in correlations. I'll show you in a second. And that means you have to start looking at the micro risk more than the macro risk. I'll show you. Anyway, if you just take a look at this level right here, again, did we break? No, we didn't. What's that level right there? Again, it's that non-farm payrolls, what? 830 level. It's why I always tell everybody when they're looking at these levels to pay attention to them. It's really important to pay attention to these levels and then see how they act. And you can see really clearly here, we did not break. We tested that here at 11 o'clock, and we tested it here again at 3:30, and we're just not breaking it. So there's not really anything there for us to do. We just have to watch it and monitor it. Now, if we take a look at this on the hourly, same exact way, that's obviously not going to make anybody warm and fuzzy, but you didn't break like you did on the S&P. And there's a couple reasons for that. You're breaking on a couple things there. You have a couple more sectors there that can break. But if we do the same thing again and just look at the Ichimoku cloud here, you are below it, and you did turn here. And you always watch these little turns right here. I use it on the hourly more than anything else. And what I would say is that, are we getting something like this? Or are we going to get something choppy? I don't have an answer to that. The only thing I can tell you is this is what we have right now, and this is what we're getting. And then you can see right here that, sometimes it really does break, and it's something you certainly want to pay attention to. And other times, not so much. It's not that bad, right? You probably get through it. Maybe it grinds a little higher, and maybe it fixes itself. But you don't want to ignore it. So when I'm on the other side of this, it means more to me here than it does when we're here. So I hope that makes sense. So even if you're looking at this line, people would say, oh, well, we're at the same support. And I would agree. Yes, you are. But if I'm below this versus where I'm at over here, to me, it's different. It might not be different to you, but it is to me. So I would watch this. I'd watch this flip. And if you know how this is calculated, you would understand the significance of it. And you can go watch that video if you want. But other than that, do we have a major breakdown? No, you don't. You just have a day where things went down and not up, and people are panicking because they've been going up every day, and everyone feels like they're super smart. So I would suggest that this is definitely something for us to look at. Now, what we're going to do is focus on a macro issue, and then we're going to get into a micro issue. Now, to start with, what we're seeing is the 10-year hold a level here, and most people say don't chart yield. If it moves, I chart it. I really don't care what they think, but it's not a coincidence that you got right to the 55 and you held. So what that probably means is this level is they're actually selling bonds. It's not ideal for the long end. I'm going to show you what the issue is, and you can see even here on the 20-year how you got to the 55 and you're trying to hold. We all know CPI is on Wednesday, and let's look at what the issue actually is. So we have CPI coming out, and I'll show you how I look at this back envelope and calculate it, but Year over year is 2.627 is what they're looking for. The inflation rate over month is 0.2 to 0.2. Year over year, 3.3. So they're telling you it's going to come in line. I'll point at what the issue is, and this gets a little complicated, but not a lot, and then we'll go through how this should play out on Wednesday or what you should look for. But you see this year over year, 2.6, 2.7. Here's where the discrepancy is coming in for those that are the bond mavens. Now, we all saw the non-farm payrolls come in where it came in, and we could see the breakdown right here and how it played out, the government jobs, the manufacturing non-farm payrolls, how that starts to help us understand where we're at here with the 227 by looking at that. All right, see this hourly earnings right here, average hourly earnings year over year, 4%. There is no scenario where average hourly earnings year over year are growing at 4%, and this is not from me, this is from economists that do this for a living, where you have inflation with a two handle. So the fact that you have 4% earnings growth, wage growth, which you have, whether we want to admit that we have it or not, there it is. So when we have that, and then we're out there saying that we're going to come in at 2.6, 2.7, that's where it starts getting sticky. And that's when they start talking about sticky inflation, saying, well, how are we going to do this? Now, there's a couple of maneuvers that could make it happen, but this is what was really I was trying to wrap my noodle around this, and I'll show you. So in front of us is CME Fed tool, and you come here to December, and you look at where you're at, and you have this chance of us staying current roughly at 15.9%, which to me is kind of crazy, but that's where you're at, and you can see the 84.1 here. But to me, from where we were last week, 31% chance of staying there, 61% chance of a rate cut. To have that non-farm payrolls number come out, and again, what you're looking at here, for those that don't know, this is the current target, 450, 475, and there you are, 450, 475. 425, 450, and that puts you right here, right? Shows the probability of easing, the probability of no change, and the probability of a hike. And this is just for December. You can click through these, and it's free. But now you see how we jumped here, but this is what's really interesting to me. Their target is 2%. They know that if you have average hourly earnings of 4%, a two handle is not realistic. Then you're going into CPI coming into this Wednesday. The way that I look at CPI is I look at two things. I really look at three, and I'll show you all three so that you're prepped for it. You can see what I look at, and you can do whatever you want with it. But what I think is important about this is if you have average hourly earnings here year over year, I'm going to say it again, at 4%, you don't see a two handle in inflation. So something's off, and we're trying to figure out what that is. Now, we're seeing some divergences, and I'll show you what I mean by this. So we see the long end of the market selling off, right? We can all see that. The long end of the market, the 20-year bond prices are dropping, right? Which means yields are going higher, which means they are selling what? They are selling bonds. And then you can see that through the TMF as well. Okay, so they are selling bonds ahead of CPI. Well, why would you sell bonds if they're going to what? Cut rates. You wouldn't, okay? And again, there's a couple things that I look at here. The majority of CPI to me is tied to energy, period. Whether it is housing, rent, whatever, to me it's all energy because you have to get from one place to another. So when I look at crude oil, I have been doing this for years, and it just gives me a really good back envelope way to look at it and understand. So here's October 1st, and if I drop a pin here from an average volume weighted average from October 1st, and I drop it to, let's say, the 30th, right? That's going to put me right here, okay? And we would see that we would have had higher oil through October. There's no way about that, right? From that date on, oil would have been higher, okay? Then you come into November, and you do the same thing. And you just drop a pin and go, okay, well, from the 1st to the end of November, we would have lower oil, right? We can see that. So if we know that energy prices on crude are lower now than they were substantially, right? If just take the average and look at it that way, then you would look at gas and go, okay, well, what about gas? And to me, again, I look at gas and you would just do the same exact thing. You would just go there and drop a pin and go, okay, here's October 1st. And we can see from October 30th, right in here, that you would have had a higher number, which would equate it to what? Well, that would have equated to a level that would have stated, yep, I could see why we would have had a high CPI then. Okay, come in here to November and drop a pin. Well, we're definitely lower on gas prices now than we were. So if the numbers are going to be stagnant and they're going to have the same percentage of growth in inflation, where is it coming from? So it's going to come from two places. It's got to come from rents in one way or another because they're 33% of the CPI number. Or is it going to be autos? Or is it going to be your flights? And this is where it gets kind of interesting. I'll show you a third one that I look at. Now in front of you is Manheim, and we can see that it's lifting as well here. And this is used vehicles value index. This is free. You can go to the site yourself and pull this up. But what's important about this is this looks like it's lifting, right? It looks like car prices are lifting a little bit. And then if you dive into the data, this, again, free site, you can go here because cars are one of those variables that tends to move around. But again, seasonal adjustment in the index amplified the changes for the month. The Manheim used vehicle index rose 20,205.4, an increase of 0.2 from a year ago. Okay, so year over year, you're higher. Okay, so we know that on the year over year CPI, we know that used cars are going to be higher. But then you start looking at the month over month data, and it's declined slightly, amplified by the change in the non-seasonality. The non-adjusted price decreased, meaning they're not adjusting seasonally, by 0.1, moving the unadjusted average down 1% year over year. But they adjust for where it's at. Wholesale values give back a little bit. Strength we saw earlier in the month depreciated less than normal. The Thanksgiving holiday usually slows down the market. So does this look like an area where we're going to see some kind of support? To me, it doesn't. In November, Manheim market saw values decrease every week, larger declines seen in the last 2 weeks of the month. In November, Manheim market report values. This is where you would go sell your inventory, then they would take the inventory, sell it to Carvana, would go here buy a car, and then sell it to one of us, for example. Over the last 4 weeks, the 3-year-old decreased an aggregate of 0.9, including a drop of 0.3 in each of the last 2 weeks of the month. Those same 4 weeks delivered an average decrease of 1.2 in 14 and 19, indicating depreciating trends were less than typical. But you're still depreciating, you're still going down. This is also kind of a side note, but interesting. You want to see how EVs are doing out there? Not too well. But the point that I'm getting at here is, where's the strength in the CPI going to come from? And candidly, I don't have an answer to it. The only thing that I could think about is maybe rents are significantly higher, and that's why they think it's going to come in. So that CPI number is everything. And what we're starting to see is we're starting to see risk off. And that takes us back to what we were talking about with the ES. And I think that's why the ES is dropping the way that it is. I think the ES is just taking a step back and saying, you know what, we've come so far so fast, and the S&P's just saying, let's just take risk off. Let's take a look at this number. Non-farm payrolls was okay, but you can see that that is becoming an area of interest. And now we're going to have one with CPI. And I think that's what's going on because the numbers are staying in line. You have the data that was fairly decent for non-farm on the other day. You have wages going up, but then at the same time, every data point that makes up CPI is going lower. But maybe I'm missing something. Maybe it's on the rental side. Maybe it's on the med devices side or the medical supplies or the healthcare numbers. I'm not really sure, candidly, but is that going to be enough to overcome what we're seeing on the crude oil side, what we're seeing on the gas side, what we're seeing in the cars? I'm not sure it is. So this is something that I'm paying attention to, but to me, it's risk off. Syria I thought would be a bigger deal, and you didn't see that overnight, but now you're starting to see that. We should talk about this. Overnight, there's no better indicator than are we going to be a risk on, risk off than watching Bitcoin. You can just time your watch to it, really. If Bitcoin's strong, then the market's going to wind up opening. And even if you don't trade after hours, which is fine, you're going to want to watch this. Even if you don't trade Bitcoin, doesn't matter. But you do want to watch this, and we're starting to see a little bit of a break here. This was surprising, candidly, but we started to see it Sunday night. One of the easiest trades that we've been doing in the community, and if you're on the wait list, please check your email this evening because there's only 48 hours left. If you're on there, you should be getting one this week if you're on that list. And then the community will close to sometime in 25. But again, 420.44, you can see that level right there, and I've been marking that off from that peak. But see all my levels in here? So I'm gonna click this right here to hide them for a second. And then I'm just gonna pop this in real quick and show you where the 22 is. Now, since you broke the 55 here, you have not closed below the 22. This is the first time. Since you broke the 55 here, you have not closed below the 22. That's the end of a long-term trend. You usually give them 3 to 5 days to get back above it, and then if not, the trend's busted. Okay, so this long-term trend might be coming to an end here. Now, what was interesting about this is I didn't think that this would break today, and it did, clearly, but coin was actually setting up better and had more downside protection, or downside profit, I should say, protection, wrong word, been a long day. But I thought we could get to this 315 level. So when we started to see it roll, this was actually the trade that we did. And it's pretty simple. I really don't like options right now. I find them really very expensive, and I'll show you what I mean by that in a moment. And then I'll explain why that is. But what we did was we just watched this, assessed the name between the two names, between coin and between the MSTR. And we just did that by looking at which one was further away from the 22-day moving average, because that's going to be a major level of support. Remember, the way that I look at the world here is, if I'm above the 12, I can still swing trade it. If I lose the 22, bulls and bears, that's the flip line, and this is institutional support. So when I see something like MSTR, to me, it's like, okay, well, yeah, we can't do the swing trades anymore, right? But when you lose the 22, you've lost the bulls and the bears. And I didn't think that you would get to that point. And again, no one ever knows, but here you are and you did. So what that means is that, all bets are off and this could get bearish, but it did mean that there was more chance of downside faster in coin should this accelerate. Here, take a look at this. If I had to say okay, which one has the most potential? I think it's this. You could do it with puts, and then if it works, it works. If it doesn't, it doesn't. What are the puts? 300s, $3. It's almost worth it to just buy them and leave them on all week. And then if you got it, you make a killing. I think that's the move. I'm going to buy the 300 puts on coin. I paid $340, and then I'm going to use a 50% stop. And if I get stopped out, I get stopped out. Maybe I get 310 and I get a double out of that. I do think that this could get goofy today. You're starting to say it. There you go. You're up 50 cents. But again, I'm not trying to make 10%. But if you're trying to make 10%, then do what you want to do. 470 on those coin puts. I paid $340, so you're up 35%. Coin gave up already. You already gave up 320, so that's that. Probably 312, 310 is what I'm thinking. I think you can get down there. It's the low of that bar. 315 seems like an absolute gimme. 315, well, there's my target. Now the question is, what do you do? So my first target's hit. There's 6, quarter. What did I pay? 307. So we're up 100%. All right, trim. Now what's getting frustrating, and usually what I do when I'm buying puts, is I just short stock at the same time. I just find it easier to move out of the stock. It's just so much simpler. But I understand that not everyone can go out there and short enough stock for this to be worthwhile. So I also do puts at the same time in the room. But the way the market's set up right now, people are looking at the VIX and they're assuming that the volatility is cheap, because they're going, oh, well, the VIX is here, and now you see that little move coming right off that level. We're actually setting up for the first higher high that you've had in some time on the VIX. So actually here, you're probably setting up to start seeing a little more weakness. But you're also seeing some protection going into the market, going into CPI. But anyway, you see where you're popping right here a little bit? Okay, so you're popping up a little bit right there. So people are like, oh, but it's still so cheap, so options are so cheap. No, what's happened is that you're seeing micro risk versus macro risk. So you have this change. I'm just going to walk through this really quickly. I can spend more time with it on a Saturday, but understand this. Right now, when you have the Qs and the SPY looking like this, right? And this is what they look like right now, where you're seeing a breakout. Look, I'll do it in line form and we'll get rid of all this. So what you're having right here is you're having a breakout, a straight out breakout. The Qs are breaking away from the SPY, right? That's what's happening here. We can all see this breakout. If I drop a line right there coming across, everyone could see that they could go left shoulder, head, right shoulder, neckline, right? You could do that a little bit. You could even say left shoulder, head, neckline if you're saying, well, that ruins it. So then just kind of go here and do it that way. That's what you sound like. So if you see this going on, you see how this could break out, where you can get to, right? But what's important about this is when you get negative correlation between these two, because if one's going up and one's going down, that is not positive correlated. Positive correlated is when they're just going sideways. If they're breaking out and one's moving, they are what? Negatively correlated, right? Because one's moving and one's not. It's not rocket science. Where the correlation's good here, where you have negative correlation here, okay? And you'd want to own the Qs, not the SPY. When you see this, you have to drop from the VIX and start looking at the implied volatility of each individual name and compare that to historic volatility. The issue is the majority of you are not going to be able to access historical volatility versus implied volatility and look at it. There's certain websites that do it for free. I'm going to show you a really simple way of doing this. If you take something like coin, for example, and you look at coin, and you go here and you go to the ATR. We'll do it this way and go ATR. And I'm not going to have time to edit this, so you're going to just have to bear with me here. But you go here and go, okay, well, show me before November 5th. All right, so here's November 5th, and this is before the election, and this is post-election. You're like, okay, well, coin had a 10 ATR. Now, ATR means exactly what I'm saying, the average true range. This is the range that the stock could be in for the day, 10 points. Since this date, and you could say, well, it's earnings. I don't care why you say it is, but obviously earnings were here, so it's obviously the election, but whatever. So let's just say it's since the election. And now you start looking at it going, okay, well, I'm at 25, and you were used to trading at 9. Well, that's an enormous difference. You say, well, the stock's worth more now. Well, even here when the stock was up that level, look at where the ATR is. So your volatility on this name has gone up like 2x, and people are still trading it like the volatility is 1x. And that's why they're not making any money on the options. They're not understanding that the implied volatility of the option over the historical volatility is through the roof. So you're getting these huge moves and you're like, why am I not making any money? I'm nailing this. It's because the implied volatility is so out of whack. So what you have to do is you literally have to go through your names, and the easiest way to do this is just pull up ATR and look. Here's a great example of it. Here's MSTR. And when you're here and you're breaking out from November 11th on, people are thinking that, oh yeah, this is usually the ATR. You're right around 14, 15, no problem. I'll be able to stay in this. All of a sudden your ATR is 50, which means that if you're doing a swing trade and your stop is less than $50, you could be stopped out just by a 67% chance. Think about this as a 67% chance. And you could take 50, I'm just gonna call it 50 to make the math simple, and say 25 up, 25 down, but it's also 50 up, 0 down. It's still the range, right? So when you look at ATR that way, this is why people are getting whacked around and they don't understand it, and then the names are going higher. It's also why you're not making as much money as you can on the options. So a great example of this is Tesla. We came in, long a bunch of calls, did well off the open, but everyone's looking at Tesla today and saying, oh, it's broken. Well, the ATR was $18, right? That was the ATR, what it went to. Before this, we just take an average, you're at 10. So let's just call it 2-to-1 to make the math simple. So you're looking at it today and going, my God, we're all over the place. This is it. This is the big meltdown. And we're looking at it and going, oh, well, you're really only, you're basically 2 times ATR on the entire range, which is high, but it's nowhere near what people think it is. That's a really important distinction, because even on days when it's not that extreme, when it's something like this, you're like, oh my gosh, we're going through the roof. And you're like, actually, you're just trading at 1 times ATR. It's not really.
Okay, so some things to consider. CPI coming in on Wednesday. What's it called? Market prep beforehand. Honestly, I feel like it's just liquidity from non-farm payrolls, because I am thinking in terms of price action so far. But we'll see. And also, I want to see if we break this level right here. What's that? It's about around 524 before I even enter into anything, honestly. Yeah, if we break this fair value gap, I'm going up. I'm going up. And we may as well do TQQQ. See what the options are on there. It's not entirely solid that we buy it off the open, but it's kind of what I have to do with the amount of how do you say, money that I have. That's how you say it. Market's about to open here. Yeah, definitely going up. Q's options looking like? Looks like we're respecting the fair value gap. Oh, nope. Let it dip. Let it dip a little bit before we switch over to puts. I'm still on calls, yo. Got some rejection going on there. Boom. Oh my god. I don't know why it's like that. Boom. Alright. Yeah. Hitting the 55 on what, 5 minute. Alright, so we bought that little dip. We'll see what happens. I mean, if it crashes further, it's because of CPI. Well, look at that. Look at that. Rejection. Rejection back into the FVG. Boom. 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 $2. Come on now. $2. Everybody likes it. Everybody likes it. I'm not sure if that trading view economic calendar is what we want to be looking at, but I'll sort some out for us. Going up on a Tuesday. Going up on a Tuesday. Do not have TPs or stop losses yet. If we break below the 55 though, that will not be fun for the day, and then I'll likely have to take a break before I stream again. But you know, that break will come with learning, you know, some knowledge. Still in that fair value gap. RSI looks helpful. Got some space. Going up. Going up. Boom. TQQ is looking a little bit expensive for how out the money it was for what we have to work with. But it looks like things may go our way today. I'll set stop losses as soon as we confirm things. Otherwise, I'm willing to lose it all for the day. But let's see what's up. Some price rejection there on that move up, but it looks like it's just grinding. You know, we are at highs, and you know we have levels. We do have levels to work with. Yeah, we do have levels to break into. Yeah, and if this 15-minute closes up, then we're definitely straight for sure. I mean, look at that rejection. Oh yeah. Yeah, we're getting somewhere. We're gonna get somewhere today. I mean, that volume bar does not look fun. But you never know at open. You just never know. We're looking to break this. Break the whole gap. We break the gap, we're solid. We're set straight. And we close this above there, then we're definitely straight. We did not close above there. Well, we wait a little bit. A bit of a fight here. This fair value gap, like right near the middle too. I just want to get confirmed above some. Looks like we're pushing. Yep, that's gonna get confirmed above. So looks like we got a good push going. Yeah, and our contract is staying above the 2, even though there are like some pushes down. There you go. You know, one thing already would say is that if there is consolidation and your contract is staying in profit, then you're likely in a good spot. There's some rejection off that fair value gap. You know, we did break it. We were confirmed under, but just push back into it. Could be the retest. You know, if it is, then we're not straight for today. But this is curving up. You know, and we want to see the 9 above the 12. That's what we want to see. We don't want to see it retest to go back down. Would not be fun. There you go. There you go. And boom. Just like that. We're over the fair value gap. I'm setting stop losses. Want it to break above 15 before I do. Don't want to give it a chance to come back down for consolidation. Getting some good pushes right now. Yep, there you go. There's our stop loss. We're going to set take profit to it's at a high take profit just because no, it's not going to be that way, but and then we'll move our stop with the trade. And we're waiting for it to get to one of our levels there. 525.45. We will move our stop with the trade. Just want a good breakout before I move that stop, though. We may get it here. And see, what I don't like is that I can't, like with the options, you have to look at the options chart to move the stop and take profit. Like what? Why is like it only shows the TP down there. Now this is definitely a confirmed breakout from the fair value gap, so I'm liking what I'm seeing here. Yeah, this bar goes up, I'll move my stop loss to about 16. And take a look at that RSI. RSI is above. This is on a 1 minute. The 15. RSI is approaching 5. Just broke. Good bars though. Good bars. Okay. Move my stop. Move it to about here. About 15. There you go. Going up on a Tuesday. Going up on a Tuesday. Now I'm gonna look at those other names, see what's popping, see what's not. Apple about to break out. Meta above. Microsoft above. Tesla. What am I on? 5 minute above. There you go. Amazon above. Netflix getting there above. AMD. Oh, look at the short on AMD. Isn't that fun? Nvidia definitely above. And Nvidia seems to be going higher. I'm liking what's going on so far. Once Apple breaks out of here, looks like we're pushing further, guys. Which is always lovely to see. I'm not sure exactly if all my analysis nerd goggles is to take credit for it, but looks nice so far. This red candle, if it turns into a hammer there, then I'm moving my stop further. Once I see a hammer, I'm moving my stop further. Once I see a hammer on either side, I'm moving my stop further, because it may just turn green on the options chart. It's going to come down to that 9. You can say that's a hammer, but I want a better hammer. See, this is why I don't like looking at the options chart. I need to learn how to read the options chart. A hammer or another breakout, and I'm moving my stop further. Because I'm willing to risk some just to hope for a retest or a bounce off of the SMAs. We have not reached that level yet, though. If this candle encloses one of them, then that'd be nice. I could move my stop there. Oh man. Risk management, yo. Why have I never practiced this before? You know what I'm saying, man? Like, what, 4 years? Could have had so much money by now. But hey, live and we learn. I want to see a breakout off of 525. I'm just waiting for a breakout. Take a look at the 5 minute. 15 still has room to go, yo. I don't think this is the best way of looking at it when managing an options trade, but we'll see. I mean, if 15 turns into a hammer, then we're straight. We got 10 minutes left in it, so I'm not worried. Options is going down some. Hopefully I don't get filled in that. Retesting that SMA on the options. See, look at that. Look at that. Whoa. Whoa. Come on now. Oh, there you go. Just got filled. Just got filled off the stop. See, that's why we set stops. I may or may not want to enter again. And we may just call it a day even. Could have managed it better, could have taken that high. But we want to wait on bounces. I just want to stick to my plan there. If we bounce off of this FVG, though, I may enter again. Don't care if the funds are settled or not. If we break into that fair value gap, though, that's not going to be fun. We may even switch. Should we switch? Nah. It's rejecting. That is a crazy hammer, though. That's not the hammer that we were looking for. We wanted that body up there. If we close above this fair value gap, I'll enter again. You see how the 9 bounces off the 12, though? Sometimes it does that. If we go the opposite way, I don't want to trade in this fair value gap at all. Low key. Oh, and there's a little break. We'll see what happens on the 55. If it breaks the 55, we may switch. What's going on with everybody else? Tesla's going up. Amazon's consolidating a little bit. Netflix is down. AMD is short. Can we go short AMD? Should we just go short AMD? I feel like that's not a bad play still, even if we're late. Look at AMD. AMD is real below it though. I don't even know. What's AMD put? Pretty cheap. What's going on with the Qs? It's still trying to break. Are we playing with that fair value gap, or are we gonna break out of it? I mean, that's pretty bearish right there. Well, we're waiting for this fair value gap to play out. We don't like chop, that's for sure. Is that hour about to change? Hour's about to change. Yep, I'm going into puts. No, we did reject off of it. I'm gonna be real careful with this one. Because if these bounce off the 55, then I'm done for. And printers is saying if it's holding below 524 though, then we're set going into the hour. Look at the hour. Look at that rejection on the hour. I just want to see if this fair value gap plays out. I'll look at it playing out. We break the 55, we're set. I mean, we're confirmed off the 1 minute for below the fair value gap, so. I mean, it doesn't look like this is bouncing off of the, off of it though. Oh, jeez. Why did I play the fair value gap? Why did I play it? Because I'm a degenerate. Rejection, yo, look at it. That's bad. That is bad. See, that's the thing. Without much capital, I can't really trim. You know what I'm saying? close. Close, close, close. Done. Out of there, yo. What is wrong with me? Should have stuck to the gut. Should have stuck with the gut. See, what I'm trying to be mindful of is what chart I'm actually looking at. You know, because I keep switching through these charts and I keep fluctuating in decisions. But hey, you know, we'll leave it at that. You know, I may put a deposit in, see if we can save us some more cap, more cap. We're going to TQQ. I'm going to TQQ. TQQ. And we'll leave it at that. Oh, yeah, I don't have option buying power, so can't even do none with that. And it's hard to call these directions on no matter what you're doing, low key. But it's okay, it's okay. See, the main thing that we gotta note is that these that we got all the days in the year to trade. You know what I'm saying? We got 52 weeks. It's about to be a new year. Once Trump's in office, I'm pretty sure everybody's going, you know, knock it out the park. But yeah, hey, we live and we learn as long as we're alive, right? This doesn't look like it's going too far though. Just want to see where things go. See, wrap around the 55 instead of a bounce. Instead of a clean bounce, it wraps. Just learn to work with these MAs, y'all. Okay, we'll call it for the day. I will see y'all tomorrow, and I will deposit some in here. Well, now that we know the direction, I wonder if we can do a trade. They said that there's a 3-day grace period, though. Like, if I go to the MES, I wonder. What the hell? No, I don't think I can log in yet. Nope. It's okay. We may use our options trades to direct our futures. Maybe a nice way of going about it. Are we rejecting again? No, Qs are up. SPX is up. Huh? Why is SPX up, but these mini futures are down? I want to look into that. But, you know, I'll do more research on these futures, guys, for y'all before we get into anything. And we will have tight stop losses, yo. If we fail, we fail. You know what I'm saying? I'm not playing around with my savings. All right, then, y'all. You all have a good day. I am ending the stream. Like, comment, subscribe.